Hey there, Ed McCormack here, founder of the crypto education platform, Dchained. Today's video, we're going to talk about huge news that's gone somewhat under the radar in the financial service industry, which is Bank of America's announcement that they will be rolling out Bitcoin futures trading for its wealthy clients. And this could have a dramatic impact in the way that institutional investors come back into the market and the way that banks start to shape products and services for their clients in the crypto space. We're going to cover all of that right now. So before we jump into why the announcement that Bank of America is offering Bitcoin futures is such a big deal, let's first start talking about what are Bitcoin futures, or what are futures contracts in general. And at its basic form, it is an obligation, it's a contract that you will buy or sell any asset at a specific price on a specific date. So for Bitcoin, this is, I'm going to go and purchase a contract, and I feel that Bitcoin will go up from its price today of 30,000 to 32,000. Again, these are just examples and visualizations. And because I think it's going to go up, what I want to do is I want to try and lock it in at a price just below 32,000 if possible. So I'll have that opportunity to buy in lower than where I think it's going to go in the future. Now, in the inverse, if I think the price is going to go down, I can purchase the contract to sell Bitcoin at a predetermined price. Now, this is different than options, which is also another derivative, in that while futures provide an obligation, you have to buy or sell on that given date at that given price. Options are just that. You have the option to exercise that contract. If I think that the price is going to go up and the price doesn't go as high as I initially thought, I don't have to exercise that option to buy. I could just simply let it expire. I'll lose a small premium that I paid at the onset for the privilege of having an option, and I go about on my day. There's really no skin off my back. With futures, you have to fulfill that obligation. There's a big difference. So why would a big bank want to get involved in that if there's a risk that they're going to need to fulfill a contract if the price is higher or lower than they initially thought? And the answer is that it's compliant. As you know, banks and many financial services have to abide and operate within a very highly regulated world. And the fact is that derivatives, which include futures and options, have been around for a very long time. It exists in commodities, it exists in equities. You can even do it with things like oil if you want. And more recently, in the last few years, cryptocurrency, Bitcoin being first, Ethereum being second, have entered into the space through CME Group, which is the Chicago Mercantile Exchange, and CBOE, which is the Chicago Board Options Exchange, which again are just two marketplaces that are highly regulated that create these derivative contracts. Now, why that's important is that the banks have the opportunity to get exposure to cryptocurrencies without ever having to buy the actual cryptocurrencies. You see, how it's done is it's purchased in USD, in US dollars. So when you buy it, you're buying the contract. You're not actually owning that asset from the very onset. Again, because you're going to buy or sell it at a later date. And then when that date arrives, it settles in US dollars. So there's actually no, physical purchase of the cryptocurrency by the bank at any point in this process. And that's very attractive to a lot of very large banks. Now, why is that important? Well, it's important because we have seen many of the large banks in the US and around the world start to get involved in this space. We've seen Fidelity pushing very hard in the US to be able to roll this out. Morgan Stanley was offering greater exposure to cryptocurrency to their clients. And more so, Goldman Sachs actually announced a partnership with Galaxy Digital, which is a very large asset management firm, to facilitate crypto derivative trading in-house. So if they're not able to do it because there's regulation, so they can't actually have their own traders facilitate, they can go through an intermediary. And that's exactly what Goldman Sachs did. Now, let's talk about why this is such big news, though, for Bank of America. And this is a story that is not new. It's a story of a financial institution who takes every opportunity to beat down and, come out against cryptocurrency every chance that they get. We saw it with Goldman Sachs over the years. Morgan Stanley put out white papers saying that the value of Bitcoin could intrinsically be zero. JP Morgan and Jamie Dimon did it countless times. But what happened is that DeFi started to build up, adoption started to grow, interest from retail investors started to demand these types of products, and ultimately you saw an about face. And that's the case here with Bank of America, where despite their CEO only 2 months ago in mid-May, so Brian Moynihan, coming out and saying that they not only do not lend against cryptocurrency, but they also don't bank any businesses whose primary business is cryptocurrency or trading or investing in cryptocurrency. So he didn't mince words. Bank of America wants nothing to do with cryptocurrency. But that was only 2 months ago. More recently, though, seeing big names like Morgan Stanley and Goldman Sachs getting into this space, Bank of America had dollar signs in their eyes, and they saw that this is an opportunity. Either they seize it today and make money, or they're going to get passed. And ultimately, investors are not only going to seek other banks, but also seek digital alternatives, whether that's Robinhood, Coinbase, or the many decentralized finance applications online that offer these services. So, very prudent move by Bank of America. And now offering the ability for their wealthy clients to be able to trade with Bitcoin futures will be something that you should watch very closely, because it can not only increase the overall demand given Bank of America's size, but it'll be very interesting to see how that influences other banks in terms of whether they broaden the different derivatives products that they roll out in the cryptocurrency market, or those banks who have been sitting on the sidelines, and I'm looking at you, HSBC, who have been very staunch about not being involved with anything related to cryptocurrency. Let's see if they start dipping their toe in the water and things start to thaw out on their side. So I hope you found this video helpful. If you did, please subscribe and tell your friends. We're always looking to increase our community here at Dchained, and we'd love to have you both on this channel and at dchained.com. So until next time, happy and safe investing, and I'll speak with you soon.